Hello and welcome. You tune into Buy Now Sell Now with me, Ankita Saxena, and with me is Snehi Shah. And this is a show where we get all your queries answered by our experts. But before we get started with all your questions, let's talk about how the market is shaping up. A bit of a breather that they're coming in for the market, Snehi. I mean, yesterday the stellar run-up we saw, we are taking a bit of a breather. Nifty is down, it's fallen by more than 0.5% in fact right now.
Absolutely.
But the bright spot in the market today is the banks. I mean, Nifty Bank is continuing its outperformance, especially the PSU banks that we have been talking about relentlessly, and that's the one that's really leading the rally right now.
Absolutely, it's the entire banking space, like you said, that's doing pretty well in today's trade. Good morning. Let's take a look at what the market is shaping up to be like right now. You have Nifty that's still sub the 23,300 mark, almost at the day's lowest point, and a 0.2% cut coming in, and a 0.6% cut coming in from the day's lowest point, and we're very close to the day's low. Sensex as well, 0.2% lower. You have India Wix that's lower by 2.7%, so at least that is looking good. Like Ankita mentioned, the bright spot in the market today is Nifty Bank, a 0.5% uptick coming in on Nifty Bank. We're roughly 250 points higher on an intraday basis when it comes to Nifty Bank. That is very strongly led by IndusInd Bank, slightly more than 4.5% uptick coming in on IndusInd Bank in today's trading session after the external audit report that they got for their derivatives accounting mismatch is lower than what they had anticipated earlier. The impact is lower in terms of their financials. So on the back of that, at least some ray of positivity coming in for IndusInd Bank right now, almost 4.5% higher in today's trade. You have Axis Bank from the private banking space that's holding up pretty smartly today, 3.2% higher. You have Trent also from the Nifty 50 gainers, a 2% gain coming in on that front. HDFC Life as well, 1.8% higher, so looking good over there. On the flip side today, what's not doing well is Hindalco. That's a 2% cut coming in on that front. You have Infosys that's lower by 1.5%. Same for JSW Steel, Hero Moto, Tata Motors, Maruti Suzuki, Bajaj Auto, Grasim, all trading with cuts anywhere between 1 and 1.5%. Sectorally today, PSU banks are shining through and through. The likes of Indian Bank, Bank of Maharashtra, UCO Bank, Central Bank, Union Bank, all of these are looking good today, followed by Nifty Bank, Realty, Energy, FMCG, and Pharma is on the flat line with a slight positive bias. On the flip side, what's not doing very well, what's not holding up very smartly in today's trade is the Nifty Auto Pack, the top sectoral loser today, a 0.7% cut coming in on Nifty Auto, led lower by Hero Moto, Tata Motors, and Maruti. You have Nifty IT that's lower, along with Nifty Metal. So that's what the market breadth is looking like right now. While we are speaking of the market breadth, let's take a look at what the broader markets are up to at this point. Let's pull up a Nifty mid cap. That's in the green, 0.2%, so at least outperforming what the benchmarks are doing. And Nifty small cap as well, a 0.5% uptick coming in. So yet again, it's Nifty banks and Nifty small cap mirroring yesterday's trading session. These are the two leading spots when it comes to today's market. But that's what the market is shaping up to be like right now.
All right, that's how the market is shaping up to be. But let's get on board our guests. Hemen Kapadia, who's a technical associate DRChoksey Finserv, and G. Chokkalingam, who's the founder and head of research of Equinomics Research Private Limited. Both of them are joining us. Good morning to both of you. Thank you so much for joining us on the show. And you can start sending in your questions. The number is flashing on top of your screens, and we will get them answered by experts. But remember to send in your buying price and the holding period for the stock, and we will take your questions and get them answered by Mr. Chokkalingam and by Hemen, both of them. Let's get started with all the questions then. First up, this is Praveen writing from Bangalore. He says that he has 100 shares of Shipping Corporation of India that he's bought at 277 rupees, and he has 150 shares of GMR at an average price of 97 rupees. What should he do as far as the long-term perspective is concerned? So I'll come to you, Mr. Chokkalingam, with that. He wants a long-term perspective on both Shipping Corporation and GMR.
GMR airports, yes, valuation comfort right now is not there, but then the airport business is expected to very well, and therefore for long term it's a hold in our view. And as far as the Shipping Corporation of India is concerned, 2 points I would like to say that the global tariff war is generally negative for shipping industry. So already global analysts have predicted the global trade to fall at least 3% in the current year, and that would be negative for shipping companies. So still one has to consider. I would go with the leader, which is GE Shipping, which has got extraordinary cash on the books, as compared to many players in the shipping industry, and it is cheaply valued. And management also extraordinarily good. And March results also should be good because in Q4 they were expected to deliver one ship as a part of their sales. So all this would augur well for G Shipping. I would prefer G Shipping to Shipping Corporation of India.
The take coming in, and good morning to both of you. Let's come to you, Hemen, and let's talk about Titan, because that's the stock that the next query is upon. Our viewer Vidya is writing to us from Chennai. She's a short-term trader. She's holding 30 shares of Titan, and she's saying that she has finally made a profit on her holding after a very long time. So now she's asking if it's the right time to book profit or hold. Her average buy price was 31.50, and the stock is at 32.46 right now. So what do you suggest? Should she continue holding or now book her profit and exit?
A very good morning to you, Sneha. Thank you for having me on the show. So it's a pleasure. I'd suggest she can hold on for some more time. A short-term bottom is in place. I believe a medium-term base formation is happening. So at least in the short to medium term, the worst seems to be over. The longer-term picture is still a bit fuzzy. As of now, hold. And since she had a shorter-term view, closer to 3,300 is where she can book profits.
All right, moving on from Titan, coming to this question also, Mr. Hemen, you'll have to take it because this is an intraday trader who's writing in, who's short and long-term trader. Is Nikhil Sharma, writing from Mumbai. He says he has 100 shares of ITC Hotels at a price of 205 rupees with a target prediction of 219 rupees. When would be the right time to exit the stock, or is it better to hold on to ITC Hotels? Interesting question, given that ITC Hotels is something, it's a newly listed company, fairly newly listed company. So, he is putting a target of 219. What is your outlook on this?
Frankly speaking, I'll get a small caveat. Like you said, there's limited data, so the view would have to be taken from that point of view. Yeah. So as of now, I think he can safely keep a stop loss at around 188. I believe a close about 206 again should take it to 214 and closer to his target of 219. Once again, data is less, but we seem to be in an uptrend, and the up move doesn't seem to be over as yet.
In light of the limited data that we have on ITC Hotels, Mr. Chokkalingam, we'll come to you to also get the fundamental view on ITC Hotels. Amid the hotel space, after a very long time, HCL has seen another listed competition coming in from ITC Hotels. Which one of these two would you prefer when it comes to the larger hotel space right now?
Both are extremely valued. If you look at enterprise value EBITDA to enterprise value, both are highly overvalued, no doubt. But for long term, still opportunities are there to make some stable return. You can't create wealth in these two hotel stocks because they already created a lot of wealth and trading at enriched valuation. But between these two, I would prefer ITC Hotel because it just got listed, and the ITC parent company has left significant cash on the books of ITC Hotel. And a lot of projects are in expansion mode, and we can expect a lot of activities coming from ITC Hotels in terms of expansion. So I would prefer ITC Hotel to Indian Hotel.
Right, ITC Hotels is preferred over Indian Hotels. That's the word coming in from Mr. Chokkalingam. But let me come to you, Hemen. This is Satya who's writing in. He says he's recently bought DLF at a price of 625 rupees and he's bought it for the next couple of years. What's the outlook? Can he hold it, or what is the target for the exit? So he wants targets for exiting DLF now.
Okay, since he has a slightly longer term view, Ankita, firstly, yeah, it seems like a hold to me. And if you're looking at a target from a 2-year plus point of view, we're currently quoting at around 653. One can expect a target of around 793 and 896. 793, 896, two targets from a 2-year point of view for DLF.
Okay, so those are the upward levels to watch out for on DLF. Let's move on to our next query. Mr. Chokkalingam, we have Ghosh Dada writing to us from Delhi. He's holding 3,000 shares of Tata Technologies at a buy price of 900 rupees per share. He can hold for a long time. Is this your preferred pick from this space, and what are you making of Tata Technologies right now?
No, certainly not. Tata Technology, yes, you have a lot of comfort in terms of promoter background. But the problem is, for the kind of valuation it is enjoying on the market, it cannot be justified on the basis of year-on-year profit growth. Definitely, profit growth is not even half of in the P ratio. So yes, if somebody has trapped in the stock and sitting on loss, maybe one can hold, because in the long term, definitely it can recover 15-20%. But right now, this FY26 is also going to be a little bad. Industry is expecting almost stagnation in the year-on-year revenue growth in dollar terms for FY26. So that also should be negative for this company. So hold for long term. Otherwise, in the short to medium term, it's a sell on Tata Technology.
All right, that's the view coming in on Tata Tech. But Hemen, I'll come to you then. This is Smita Vikram, who's writing from Bangalore. She says that she's bought 25 shares of United Breweries at a buying price of 2,031 rupees. She wants a short-term view. She wants to know if she should continue to hold this or start booking profits at the current price. Hemen, this one's for you.
Yeah. Short-term view, hold. Target of 2166, shorter term target.
Okay, so those are the levels to watch out for on United Breweries. Let's move on to the next query. Mr. Chokkalingam, this is our viewer, Mr. Sujit, who's writing to us from Kolkata, holds 200 shares of Yes Bank at a price of 18.6 rupees per share. He is asking, what should he do in the short to medium term? Should he add more at the current stage? What are you making of Yes Bank?
Yeah, one can hold it in the medium term, maybe 6 months to 1 year. It can, breach 20 rupees. And most important point is that for FY26, the banking industry is expected to continue to grow its credit in double digit. Yesterday also, one of the reported rating agency has mentioned that banking industry will grow at 11 to 12% its credit, which is a big positive for the whole industry. And Yes Bank also valuations have contracted a lot after the recent significant correction. So therefore, around 20, 50, 21 rupee in 6 months to 1 year, it is very much possible for Yes Bank.
All right, with that, it's time for a quick breather. Don't go anywhere. We'll be right back with all your questions and we'll get them answered by our experts. So stay tuned. Welcome back. You tune into Buy Now Sell Now, where we are getting all your questions answered by our experts. Start sending in your queries. The number is flashing on top of your screen, and we will take all your questions and get them answered. So let's resume then with all the questions that you have sent us already. This one's Ignatius is writing from Kolkata, he's bought 50 stocks of Sun TV at a buying price of 650 rupees. Has been holding it for the last 6 months and wants to know, can he hold it for the next 3 months? What are the targets and stop losses for this? So, Hemen, clearly this question is for you.
Can you repeat the stock, please?
Yeah, the stock is Sun TV. He's bought it at a price of 650 rupees. He wants to know if he can hold it for the next 3 months. What are the targets and what are the stop losses for this?
Okay, firstly, the stop loss comes in at 650, a closing point of view. The first target would be 699. Second target would be 724 from a 6-month point of view.
Okay, so those are the levels to watch out for on Sun TV. And Mr. Chokkalingam, coming to you now. Next stock in question is BHEL. Our viewer, Mr. Satyaveni from Hyderabad, is writing to us. He's a long-term investor. He's purchased 3,000 shares of BHEL at a buy price of 316 rupees per share. He can continue to hold if you would recommend, but he's asking if he should exit or average, and if so, at what price? What's your outlook when it comes to BHEL?
Fundamentally, it is quite stretched in valuation, and even the working capital management is not that great. So within PSU space, this recent correction has given a lot of opportunities. A lot of PSU stocks have crashed even 30 to 50%. So therefore, I would give a sell call on BHL and give a buy call on stocks like Coal India, or in the banking space, Bank of Maharashtra. As I said earlier, the industry is expected to grow in double digit, and Bank of Maharashtra has already announced its business numbers. It's really very amazing. They are beating the industry by big margin. So these are the two PSU related stocks I am extremely optimistic So I would give a buy recommendation on this and sell on BHEL.
All right, buy call coming in on Coal India and Maharashtra Bank, Bank of Maharashtra. That's the buy call coming in by Mr. Chokkalingam. But coming to you now, Hemen, this is Sudha who's writing in, wants to know your view on Avanti Feeds and Cyient. It's a fairly longer period, let's say just for the next 2 years. What would be your view on Avanti Feeds and Cyient? What are the levels that you can watch out for?
So certainly, Cyient is a good buy for long term. Yes, I am aware of the fact that the IT business is in a difficult time, but still, I prefer Cyient as a medium to long term buy because they have launched a semiconductor business. They through a 100% subsidiary. They already proven their ability to unlock value from another subsidiary, which is Cyient DLM. So I'm pretty confident that Cyient will once again excel in semiconductor business as well through its new subsidiary. And the stock steep correction also has made it quite attractive. And therefore, I would give buy recommendation for medium to long term on Cyient. However, Avanti Feeds, I would stay away. I understand that from this trade war, one of the sectors which will be affected most would be business related to Avanti Feeds. So therefore, I would stay away from Avanti Feeds.
Okay, so that's the take on Cyient as well as Avanti Feeds. Hemen, coming to you now, let's talk about HCL Tech. Our viewer, Mr. Kasiraj, is writing to us from Chennai, holds 235 shares of HCL Tech at an average price of 1,432 rupees per share. He's asking, what's your medium-term outlook on the charts for this one?
We are in an intermediate downtrend, staying not only HCL Tech, the entire IT index. IT index has come off 15,000 points in the last 6 months or so. As of now, short-term bottom seems to be forming. So a medium-term target would be a recovery, not a rally. I guess a medium-term target, first target would be 1,500. Second target would be around 5065. 2 targets for a bounce.
All right, that's the view coming in on HCL Tech. Moving on, this is Nag Kumar who's writing from Hyderabad. He has 500 shares of Tata Steel purchased at 125 rupees. Can he hold it for the long term, for the next 2 to 3 years, or book profits? Mr. Chokkalingam, this question is for you. Tata Steel, now given the tariff tirade that's going on, the metal space saw a lot of drubbing after that. What is your view on Tata Steel for the next 2 to 3 years given that?
Definitely, I agree with you that the steel industry will have a lot of red flags in terms of tariff war. Obviously, China is one of the major producers of metals in the world. So, all of us know that a huge tariff hike is there on Chinese exports to US. So, obviously, there will be a lot of surplus haunting the Asian markets. On the domestic front, also, we have not been doing great. And third, the tariff war is going to correct the global growth, definitely, to some extent. And that would be always negative for metal space. So my suggestion is to look for sectors which are driven purely by domestic demand. So that is a theme I am playing out for the last 1 or 2 months ever since, the tariff war threat was discussed. So as I said, one of the sectors which is free from all possible global events are banking sector, and followed by, to some extent, even aviation, because it uses oil, and whenever there is a global pain, the oil price crashes. Already oil price is down 28%. So therefore, I would recommend stocks like SBI in the banking space or HDFC Bank, and in the aviation space, I would recommend in Interglobe Aviation.
Okay, so those are the alternatives to Tata Steel that Mr. G. Chokkalingam likes right now. Before we move on to the next query, just want to mark the recovery that we've seen in Nifty right now. We're still pretty much on the flat line when it comes to Nifty, but we're above the 23,300 mark when it comes to the Nifty. So at least looking good over there. 23,330 thereabouts is where we are, and we've seen quite the recovery coming in from the day's lowest point. So at least looking good for the Nifty right now. That's holding in the green right now, rather on the flat line, but let's see if this is sustainable for the second half of the trading session as well. But let's once again keep it going with all your queries. And Hemen, coming to you, Next query is coming in from our viewer Radhakrishna, who's writing to us from Bangalore. They're asking if now is the right time to enter into BSE for a long-term horizon, or do you believe it's already seeing quite the run-up and now we should wait for a little bit of a correction and a buy-on-dip strategy? What's your view on BSE?
I would totally agree with what you said. A buy on dips would make sense because it's had quite a run up, and 6,047 is a level where it's not been able to sustain above in the past. And currently, the bounce has come in very sharply from 3,650 or to 6,000. So yes, I think a buy on decline makes sense, and do not expect significant capital appreciation until and unless we close above 6,047. So totally agree with you. Right.
All right, moving on, a similar counter, CDSL from the capital market space, Mr. Chokkalingam. This is Venkat Rao, who's writing from Visakhapatnam. He's a senior citizen and a long-term investor, and he's holding CDSL, 90 shares of CDSL, and the buying price was 1,878 rupees. So clearly, he's sitting at a huge loss right now. At what price can he start averaging it? And for the long-term perspective, would you give a hold on CDSL, given the fact that it has run up quite a bit?
Yeah, at current price, I would maintain my aggressive buy stance on CDSL. We have a coverage with the buy recommendation. I personally do not have, but I believe that this is one of the few stocks in the large mid-cap space which assures you a tremendous growth opportunity for medium to long term. All of us know that stock exchange business is going to be here, and it is going to be here for maybe more than a few centuries also, unless the regulations change dramatically due to the technological change. Otherwise, this kind of business do not have any threat at all. And CDSL, after more than 30% correction, it has become extremely attractive in my view. So I would give a aggressive buy recommendation on CDSL at current price.
Aggressive buy, so quite bullish call coming in on CDSL from Mr. Chokkalingam. But on that note, we'll slip into a very short break on this edition of Buy Now Sell Now. Viewers, keep writing to us on the number that's flashing on the top of your screen, and we'll be right back on the other side to address more of your queries. Hi there, welcome back to Buy Now Sell Now, and time to once again begin addressing all your queries, viewers. So keep writing to us, and we have our experts back on board with us. Mr. Chokkalingam as well as Hemen is joining us back. Mr. Chokkalingam, let's come to you for this one, since it's a largely funder-based query, and our viewer Sesha Mai is writing to us, and they're holding Wipro shares at 509 rupees per share all the way back since 2021. So they're asking if now is the correct time to sell Wipro and shift all of that to HUL. Now Wipro earnings are also just around the corner, so tell us what's the view when it comes to Wipro, as well as would you recommend switching all their holdings from Wipro to HUL?
Actually, a very interesting question. Both are supposed to be the defensive sectors. So very rarely what we saw from the October when stock market started melting down, both IT and FMCG did not help many investors in upholding the equity value. Both also came under stress. Now, in this background, there is no optimism that both IT and FMCG will come back to double-digit growth in the near future. IT service exports in dollar terms is likely to stagnate, or at best it can grow at 2 to 3% in FY26. Similarly, FMCG volume, I don't think it is going to go anywhere near even 10%. So both, have a similar prospects. Of course, both have corrected quite significantly, and therefore maybe a defensive. But as I suggested, the investor should consider the growth sectors. They should stay away from largely what I call as sectors which have a single-digit growth syndrome. So therefore, as I mentioned earlier, I would prefer the banking industry. That is most comfortable. So any large cap bank within Sensex and Nifty would be far superior to both Wipro and HUL.
All right, moving on then, coming to you, Mr. Hemen. Also, I'll come to you after this, Ms. Chokkalingam, because the question is from Vinita, who's writing from London. She wants to know, she's purchased 2,000 shares of PCBL at 413 rupees for the long term. She wants to know if she can buy this, buy more at the current price, because, it has given some stellar moves in the last 1 year. Last 6 months, we saw, a 14% downtick. In the last 1 month, it has actually recouped all those losses of the last 6 months. From here on, Hemen, first coming to you, is this the right time to get into PCBL? And then, Mr. Chokkalingam, I want to know if this chemical bet is really a good bet for the longer term. First to you, Hemen.
Yes, Ankita, a decent time price correction has played out. It's been almost 5-6 months. A base formation has happened on the weekly chart. A close up of 440 should see more technical positives come in. So yes, I think a hold seems to be in order. From a longer term point of view, the stock still seems to be in an uptrend despite this chaos and mayhem that we have seen. I would say hold good above 440. Resistance comes in at 480. Looks good, hold.
Coming in from Hemen, Mr. Chokkalingam, coming to you, he says that despite all of that is playing out in the global macros, it still seems to be in an uptrend. But fundamentally, what do you see on the cards for PCBL?
Short to medium term, little stressful. User industry is a tire industry, and which is not likely to grow the volume in a big way. Of course, the tire industry makes small exports. That is likely to be under stress due to the tariff war. And of course, this company would benefit from the oil price crash because carbon black uses the derivatives of oil. So that is a positive. However, in terms of the valuation, I believe in the short to medium term, it is fairly valued or slightly overvalued. Long term looks good. Maybe it may correct 5-10% in the short term, but long term looks good because the tire industry is a perennially a growth story because of the replacement market. Automobile population is growing. Even though OEM sales are growing in 4 single digit, the total population is growing, and tire industry depends to the extent of 2/3 of the demand coming from the replacement market. And that would be positive for PCBL. And second, this company also recently took over a chemical business. So that also will be positive in the medium to long term. So for long term, it is a hold. But in the short term, I am afraid that the stock might see some 5-10% correction. That's my view on PCBL.
That's the combo take coming in on PCBL, both the funda and technical. Let's move on. Mr. Chokkalingam, coming to you. Our next query is from our viewer, Mr. Venkatesh. Stock in question is Kotak Bank. Now, he holds 5,000 shares of Kotak Bank, and that forms 80% of his portfolio. So, quite a big holding. In fact, almost his entire portfolio lies in Kotak Bank. He wants to diversify now by selling some of these shares. He's asking if this would be a good decision. He's asking at what rate should he sell those shares, and if he wants to remain in the banking space, what else should he buy when he forays out of Kotak Bank? What's your view on this query?
Yeah, so maybe he's a professional himself or extraordinarily risk taking. So generally, otherwise, average investors with average risk profile should have, at least 10 to 12 stocks. But exemptions are there. I mean, professionals or the extremely risk taking people can do such things. Yes, Kotak Bank long-term prospect remain positive, but in the short to medium term, I believe the price is fairly priced now. I believe that SBI can outperform Kotak Bank in the short to medium term. However, in the long term, it is a hold. In case it comes close to or less than 2,000, it's a buy Kotak Bank because a lot of subsidiaries they're yet to unlock. They just started unlocking one bank, but a lot more subsidiaries are there where Kotak Bank Group has not started unlocking. So therefore, it's a great long-term potential, but short to medium term, say 6 to 12 months, I don't see any great opportunity to make money in Kotak Mahindra Bank.
All right, this is a classic case of putting all the eggs in one basket. Quite literally, Venkatesh has done that. But moving on from that, Mr. Chokkalingam, another question coming for you. This is Anil, who's writing from Pune. He wants to know the view on KNR Constructions. He's already bought 1,000 shares at a buying price of 260 rupees a year back. Stock is not going anywhere, he says. So what would be your long-term view on this? Is it a hold or should he be selling it out now?
Yeah. So after the correction, the stock looks quite decent. So it's a hold. One can even buy, for a decent return. It looks good at current price post steep fall.
So that's the take on KNR construction. Let's move away from that. And Hemen, coming to you for our next query, let's talk about. Let's talk about Oil India. That's what the next query is about. Oil India. Our viewer, Mr. Ashok Kumar from Tamil Nadu, holds 31 shares. Average buy price 399 rupees. He's asking, does Oil India look good for the long term? Can he continue to hold?
Well, yes, and long term would actually mean long term, not a year or two. So patience, yes, and since it's a very specific long term question, I said yeah, I said yes. Worst is almost over. We're seeing a bottom happening above 400. Things should start beginning to look more positive. Momentum should come in. Deep correction. I said yes. I say yes. Looks good for the long term.
All right, moving on then. This one's for Mr. Chokkalingam. Hey, this is Sarath who's writing from Tamil Nadu. He wants to know your take on AU Small Finance Bank and Manappuram Finance for 1 year or more for the longer term. Now, we did see that news coming in on the gold financiers, right? Manappuram and, the impact that was coming in on Manappuram and Muthoot Finance. But going ahead, do these businesses look lucrative to you, AU Small Finance Bank and Manappuram?
Manappuram is better than AU Small Finance Bank in my view, purely in terms of valuation and also the shareholder profile, which favor Manappuram Finance to AU Small Finance Bank.
Okay, so that's the take coming in on both of those stocks, and what is the preference when it comes on the fundamentals. Let's move on from that, and Hemen, coming to you. In fact, our viewer Swati is writing to us. She's asking about IndusInd Bank. She's already sold IndusInd Bank last month at a 30% loss, given everything that's been happening on the fundamentals. Although today that stock is higher, would you recommend a fresh into IndusInd Bank right now? Is that looking good on the charts to you? And she's also asking if you would prefer HUDCO or LIC Housing Finance on the charts.
Well, frankly speaking, she's answered a question herself. I really don't need to comment on that. Having said that, IndusInd Bank, now the downside appears limited. Very strong support between the 600, 650 levels. But if you go back a little back in time, it's the performance has been abysmal. The high was posted in 2018 at 2038. 7 years and counting, we are nowhere close to those levels, and multiple banks have posted all-time highs. So the underperformance doesn't seem to be in the mood to go away. HUDCO also makes sense, looks good from a longer term point of view, and so does LIC Housing Finance. So yes, tell her that she's got a good eye. She answered her questions herself, actually.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back with your questions on the other side. Welcome back. You're tuned into Buy Now, Sell Now, where we are taking your queries and getting them answered by our experts. And you can write in your queries on the number that was flashing on the top of your screens. Let's resume with all the queries then. This next query is coming in from Shankar, who's writing from Tuticorin. He's writing about Soba Realty. He holds 100 stocks at a buying price of 1,683 rupees. He's not written his question, but I'm guessing his question is whether he should be holding it or at these levels, what should be the long-term view for Soba Realty. So, Mr. Chokkalingam, what would be your view?
Yeah, it's a decent company. If somebody is losing heavily, one can hold, but otherwise, I prefer DLF Limited. Both Soba and DLF, they all corrected, straight away from 52-week high, they have come close to 52-week low. So between these two, I prefer DLF. Recently, the management also indicated in the media interview that, in the next 4 or 5 years, they will double the profits. And their realty business is, their retail leasing business is doing well within the realty space. And most importantly, they've got a solid land bank which will take care of future growth stories. So therefore, I prefer DLF to Soba Development.
Okay, so strong conviction on DLF. That preference continues even over Sobhas. That's the take coming in on how Mr. Chokkalingam would like to play the real estate space. But moving on, Hemen, coming to you, our viewer Mr. M. Murugappan is writing to us from Chennai, asking your view on Aster DM Healthcare and asking if now would be a good time to enter and buy for the longer term. What's it looking like on the charts?
We remain safely ensconced in a longer term uptrend. No worries on that count. We've seen a time price correction and the stock has staged a strong recovery. I said yes, but keeping in mind that we are at volatile times, I wouldn't advise him to buy everything at one go. Spread the purchases, but yes, one can definitely start buying now. The bigger picture remains, as of now, still bullish.
All right, that's the view coming in on Aster DM Health. But coming to you, Mr. Chokkalingam, speaking of the healthcare space, this query is coming from Arvind, who wants to know that he wants a stock recommendation actually in the hospital space, ideally in the smaller, the mid-cap space. Hospital diagnostics, that's one space that's very domestically facing theme, and a lot of people are talking about the hospitals as a theme. So what would be your recommendation for hospitals in the small and the mid-cap space?
Yeah, definitely. Hospitals space is the one sector which I have been talking about in terms of domestic demand driven. That is a theme I would be playing out till the trade war aggressive tone settles down from the US. So this is one space one should consider. Obviously, for all conservative investors, Apollo Hospital is the best one, being a large cap stock. Those who can take a little risk can consider mid-sized and small cap hospital. We do have a coverage on Shelby Limited. I personally also have invested, but short term there are concerns. Subsidiaries are making losses, but otherwise medium to long term, Shelby Limited can create a significant wealth.
Okay, so Apollo, that's the stock that's on Mr. Chokkalingam's radar when it comes to the hospital space, pardon me. Let's move on, and Hemen, this query is coming to you from our viewer Dayanand RK, who's writing to us from Bangalore. He holds 200 shares in Hindustan Zinc at a price of 538 rupees per share. He's saying that he's currently sitting on a loss. He's asking if now would be a good time to average or should he continue to hold or sell. His trading horizon is for the next 6 to 12 months. So what are you making of Hindustan Zinc on the charts, and what are the price levels that you're spotting?
I think international events put a question mark on the sector. Otherwise, not much to lose. Has got stable. So the downward momentum has stopped. Now it's flat, and the next move would be upward. So it would be a slightly risky move, but yeah, I think one can buy at these levels. Stop loss of 380, momentum above 470. Not much to lose. Looks like a technical turnaround in the offing.
Moving on then from Hindustan Zinc to Mr. Chokkalingam, this is Shiva who's writing from Hyderabad, wants to know about your view on Vodafone Idea. He's bought 1,600 shares at a buying price of 10 rupees. He wants to know if he should exit or hold.
I've been covering this stock on the channel many times. My view is same. Fundamentally it's a sell, but this fundamental sell call can go wrong. In case the stakeholders and also the lenders make any big sacrifice. Already one positive development has happened. The government has converted its due into equity. Now the equity size is far bigger than the annual sales. So that is also negative for fundamentally, because very difficult for this company to justify this current price on such an enlarged equity. However, tactically I can go wrong if lot more sacrifices happens from the government or other private promoters or from the lenders. These are the one of the three possibilities which can make this stock good buy, but which is very difficult for analysts like me to predict. So yes, tactical opportunities are there, but fundamentally it is a sell. So the investors have to take their own call based on the risk appetite.
Okay, so take your own call based on the risk appetite for Vodafone Idea. We've seen quite the flip-flop coming in for this stock. Well, that's the take on Vodafone Idea on the fundamentals at least. Let's move on to the next query. And Hemen, this is coming from our viewer Kusuma, who's writing to us from Pune. Her stock in question is Havells, and she's asking what does it look like on the charts for the next 6 months. She holds 17 shares at the buy price of 1,756 rupees per share, currently sitting at a loss of 8%. Should she hold on in hope for a recovery? Is that what the charts are showing?
Well, incidentally, Sneh is just given a breakout today. So very clear hold. Time frame and the cost is something else. But as of now, high tops, high bottoms, oscillators, by everything looks hunky dory on technical parameters. We're currently at 1619. Expect a price target of 1680 and 1750. Once again, this is based on the fact that the markets remain copacetic. No stocks are going to, no, that's the wrong word, but majority of the stocks won't outperform if the market slips back. But if the markets remain fine, the stock is moving up.
All right, that's Havells on the chart. Coming to you, Mr. Chokkalingam, this is Bhupinder Mehta who's writing in on ABB. He's bought this 55 shares at a buying price of 4,090 rupees. He wants to know if he can buy more at the current levels and what is the prospect for ABB in the next 1 to 2 years.
So, post steep price correction looks good, and also, this also indirectly fits into my theme of domestic demand-driven business. Largely, it is catering to domestic demand. So, therefore, I would give a buy recommendation on ABB at current price.
Chokkalingam, just want to come back to you on that previous query because I'm curious to know what are you making of Havells on the fundamentals, because we've heard reports on increased competition in the wires and cables space. This space has not been holding up pretty firmly over the last let's say couple of months now, or rather couple of quarters. What's your outlook on Havells when it comes to the fundamentals as well? Would you prefer to even foray into the wires and cable space, and if yes, would Havells be your pick in that sector?
Yeah, very interesting question. Havells India historically had always a very high enriched valuation. So therefore, based on the fundamental giving, sell call in the past used to be of no use. But now, as you rightly mentioned, the industry structure is changing. A couple of very big players are planning to enter, as per the media sources. So therefore, I doubt whether Havells India can sustain this kind of enriched valuation in the near future. However, if you ask me, what is the outlook for the cable and wire industry, that particularly non-telecom related, it's really excellent. I think the market has overreacted because the existing players are well known. They have got a solid brand in the market. So it means, what is considered as a negative also can be a positive in terms of possible consolidation within the industry, because all the large players we have already seen in many businesses, they opted for consolidation and inorganic growth. And I believe, it's a purely my personal perception that there is a possibility of further consolidation happening in this industry because of the entry of big players. And we have come out with the buy recommendation on Finolex cable. And based on the relative valuation and its brand positioning and balance sheet strength, I give a buy call on Finolex cable in the entire cable and wire industry.
Buy call coming in on Finolex cables in the cable and wire pack. But moving on from there to Mr. Chokkalingam, I'll stick with you, and then I'll come to Hemen, to you also about the technicals. This is Milab who's writing from Kerala. He wants to know about NMDC. He's bought it at a price of 61 rupees. He wants to know if he should hold this counter or switch over to some other counter. Is the question for you, Mr. Chokkalingam.
Yeah, so NMDC is a great company, no doubt about it. But what we are discussing, this tariff war is terribly negative for metal space, particularly. There is a direct trade war measures, and also this industry is going to be impacted indirectly by the trade war, because, as I mentioned, the trade war is definitely deflationary in nature. It is going to bring down global trade, global GDP growth. That would be the maximum adverse impact for a metal and mineral. So therefore, I would shift to some other PSU stocks which do not have this kind of exposure to international economy or possible impact from the trade war. So therefore, I would reiterate my buy recommendation on stocks like Coal India or Bank of Maharashtra.
Okay, so those are the alternatives to NMDC. Hemen, just very quickly in 30 seconds, if you could tell us buy, sell, hold on NMDC, what's your take?
Hold.
Okay, whole call coming in. Thanks for that answer, Hemen. On that note, we'll wrap it up on this edition of Buy Now, Sell Now. That's all the time we had on this show. Hemen as well as Mr. Chokkalingam, thank you so much for joining us and patiently addressing all our viewer queries. But viewers, keep writing to us on the number that's flashing on top of your screen. And once again, tomorrow at 11 a.m., we'll start addressing all your queries. Till then, you stay tuned to ET Now. Markets at Noon is up next.
If you like this video, then like, share and subscribe to ET Now.